So Hargreaves Lansdown has decided to launch two long-term asset funds directly to retail customers. And that's in partnership with Schroders Capital. And this is going to happen from September the 15th. Now, there are the two funds. I'm not going to go into great detail about them, but we'll put links in case people want to have a nose at what they are. But they do have a minimum investment of £10,000. And the early access to them is restricted to eligible clients. So what are LTAFs, so long-term asset funds? Well, they're a new fund structure that was authorised by the Financial Conduct Authority, the FCA, and it was created in response to a very real problem. So the mismatch between daily dealing of open-ended funds and long-term illiquid assets. So if you think back to the Woodford scandal in 2019, that was a fund where investors thought they could sell daily, but the underlying assets, which were small unlisted companies, couldn't be liquidated fast enough. When redemptions surged, the fund had to be gated, leaving investors trapped. Now, the long-term asset fund is meant to fix that. It's specifically designed to hold illiquid investments like private equity, infrastructure, and private real estate. So assets that can't be bought or sold quickly. Now, the key difference is instead of daily dealing, the long-term asset funds are built around a minimum redemption notice period of at least 90 days, and they can only deal as often as monthly. So on top of that, managers can also use extra liquidity tools such as redemption gates or suspensions to aid the transaction and the redemptions of anybody's investment. So when you invest, you're not dipping into something you can sell tomorrow. That's something really important to bear in mind when you're looking at a long-term asset fund. What you're doing is you're actually committing for the long haul with no guarantee you'll get your money back exactly when you want it.